Cuba, long boxed in by stringent U.S. sanctions, now appears ready to join the BRICS club. Brazil, Russia, India, China, and South Africa. This move could unravel decades of economic pressure from Washington and challenge the power of the US dollar in world markets. Many see this as an emerging front in the global trade war, especially as BRICS expands, explores new currency paths, and invests heavily in electric vehicles, EVs. If Cuba successfully aligns with these rising powers, the impact on US sanctions could be huge. The question is, will Washington stand by or tighten the screws even more? Why US sanctions on Cuba have such influence? For over 60 years, the United States has enforced a strict embargo on Cuba, aiming to isolate the island's communist leadership. This policy blocks most trade and financial links and extends to foreign companies that do business with Cuba. A bar chart from the US-Cuba Trade Council shows a 90% plunge in bilateral commerce since 1959. Consequently, Cuba struggles with outdated infrastructure, limited foreign exchange, and few high-value exports. Despite occasional talks on loosening restrictions, such as during the Obama administration, major breakthroughs never solidified. Beyond mere trade, U.S. sanctions effectively locked Cuba out of the global dollar system. If banks or corporations violate these restrictions, they risk massive fines or losing access to U.S. markets. That's why many financial institutions steer clear of any transaction involving Cuba. Even friendly nations like Canada or Spain tread carefully when dealing with the island's economy because U.S. secondary sanctions can bite hard. However, BRICS membership could offer an escape hatch, letting Cuba deal outside the dollar-based network. BRICS, a potential lifeline for Havana, the BRICS bloc, Brazil, Russia, India, China, and South Africa, has steadily grown in economic clout. Its members represent over 40% of the world's population and roughly a quarter of global GDP. Even more significant, some BRICS nations, particularly China and Russia, aim to reduce reliance on the US dollar. They discuss local currency trades, alternative banking networks, and even a possible shared BRICS currency. If Cuba joins this group, it could tap into these alternative financial routes, trading in yuan or rubles and sidestepping the dollar altogether. A recent working paper from a Brazilian think tank outlines how new BRICS members might benefit from joint development projects. For Cuba, that might mean investments in roads, tourism, energy, and technology. Cuba's tourism sector is bouncing back from pandemic lows, yet a local Cuban government report from 2022 states that airport and hotel upgrades are urgent. Without fresh funds, the island risks losing out to cheaper destinations. If BRICS nations supply credit and know-how, Cuba's economy could modernize, loosening Washington's grip. The big dollar challenge, much of America's global influence, hinges on dollar dominance. Over half of global trade still takes place in dollars, and the currency remains the top choice for central bank reserves. But the International Monetary Fund, IMF, notes that the dollar's share of global reserves dropped from around 71% in 2000 to near 58% in early 2023. Economic pressures, including sanctions on Russia, spurred many countries to seek alternatives. BRICS expansions act like catalysts, offering smaller nations a chance to break away from dollar-based transactions. If Cuba begins using yuan or rubles for big deals, it's a strong statement. Even a heavily sanctioned economy can operate outside U.S. reach. That could inspire other sanctioned nations like Venezuela or Iran to do the same. The more countries adopt non-dollar systems, the weaker Washington's sanctions become. The US might retaliate with fresh measures, but Beijing or Moscow might shield Cuba from the worst. In that sense, this move undermines not just the embargo on Cuba, but the entire concept of dollar-driven sanctions. Electric vehicles, a surprising link. BRICS countries prioritize green tech. China leads in electric vehicle production and battery manufacturing. India wants to boost its EV market to cut oil imports. Even Russia invests in nuclear and some battery research, while Brazil focuses on ethanol. South Africa eyes hydrogen. If Cuba secures BRICS funding, it could become a hub for small-scale EV assembly or testing. That may sound odd, considering Cuba's classic 1950s cars and aging roads, but the island's urgent need for modern transport could turn it into a pilot site for EVs. Chinese firms have been expanding EV exports globally, and a rumored deal with Cuba could place production lines just 90 miles from Florida. A line graph from the China Association of Automobile Manufacturers shows a 68% rise in Chinese EV exports to various regions in 2023's first half. If Beijing invests in Cuban EV plants or charging infrastructure, it not only boosts its global green ambitions, but also scores a strategic point near US shores. Imagine a scenario where Cuban-made EVs, financed through BRICS banks, begin competing in Latin American markets, or even beyond. Trade war overlaps. US-China trade war looms over these developments. Both sides impose tariffs on each other's goods, fight over semiconductors, and push to localize supply chains. Washington's Inflation Reduction Act, IRA, gives subsidies to American-made EVs, irritating European and Asian allies. Meanwhile, China invests in foreign markets to offset US barriers. Should China see Cuba as the next frontier for EV production, we could witness a new dimension of competition. US carmakers still rely on key materials from Asia for batteries. If Cuba becomes a link in China's supply chain, it might circumvent American tariffs or shipping constraints, adding complexity to an already tense situation. Moreover, if trade shifts to non-dollar currencies in the EV sector, US businesses might lose out. They rely heavily on established dollar-based channels for deals. A pivot to yuan or a new BRICS currency undercuts that advantage. Add in the possibility of lower-cost Cuban labor once the island's infrastructure improves, and the US could face a competitor fueled by Chinese technology and Russian capital right on its doorstep. Washington's calculus. How might the US respond if Cuba formally joins BRICS? Traditionally, the embargo and secondary sanctions have been America's go-to tools. Yet these only work if the entire global financial system backs them. If major economies in BRICS are willing to challenge the US, sanctions lose teeth. US policymakers could escalate by targeting specific Russian or Chinese entities that deal with Cuba. But that might inflame tensions with Beijing or Moscow. Another option is to attempt a diplomatic pivot, maybe offering partial sanctions relief to keep Cuba from fully committing to BRICS. But that would require a major shift in US politics, which remains polarized about Cuba. A September 2023 State Department briefing condemned efforts to bypass established financial frameworks, a veiled reference to BRICS. However, the statement lacked detail on how the US might react to a Cuban application. Some experts say the White House is preoccupied with other global crises, like the conflict in Ukraine or inflation at home, making it less able to micromanage every regional shift. If so, BRICS might expand in the Western Hemisphere before Washington even crafts a robust strategy. Potential gains for Cuba for Havana. This is a major opportunity. The island's economy shrank severely in the wake of the pandemic, worsened by the Trump administration tightening sanctions. Tourism, a key revenue source, dried up. Cuba's leadership has since tried small market reforms, but remains underfunded. If the new development bank, NDB, the BRICS financial arm, extends loans, Cuba could refurbish ports, upgrade roads, and bolster tourism infrastructure. A modernized cruise terminal or expanded airport might lure more visitors from Europe, Canada, or Latin America without facing the usual U.S. roadblocks. Agriculture also needs revitalization. Cuba used to export sugar, tobacco, and fruits in large quantities. Now yields are modest, partly due to limited investment. With BRICS ties, the island could sell produce to markets like India or China. Since these deals wouldn't go through US dollars, American banks can't freeze payments. A bar graph from Cuba's Ministry of Foreign Trade shows a 40% drop in agricultural exports between 2010 and 2020. Reversing that trend requires capital, which might now come from BRICS lines of credit or joint ventures. Obstacles for Havana. In BRICS, joining BRICS isn't a one-step fix. Internal divisions exist among the bloc's members. India and China sometimes clash over border disputes, while Russia deals with ongoing sanctions. Also, membership in BRICS doesn't automatically remove US sanctions. Though the group can offer alternatives, each member will calculate how far to challenge Washington. Beijing might lead the charge, but if the US retaliates with more tariffs or invests in counter-strategies, some BRICS members could get wary. So Cuba might not see immediate rescue if the group's unity falters. Additionally, Cuba's infrastructure remains underdeveloped, its energy grid outdated, and bureaucratic red tape significant. Even if BRICS money flows in, the island needs stable governance and policy reforms to utilize that capital effectively. Critics note that without serious structural changes, major foreign investments could stall. Some Chinese deals in Latin America have faced delays or cancellations due to corruption or local disputes. Cuba must prove it can handle large-scale projects, especially in advanced sectors like EV manufacturing or battery production. A global ripple. Other sanctioned states, Cuba's potential success in BRICS might inspire others. Iran, hit by wide-ranging US sanctions, already aligns with Russia and China. Venezuela, home to enormous oil reserves, also eyes escape from US pressure. If these nations see Cuba building a functional economy via BRICS links, they could follow suit. That scenario threatens to fracture the world into rival economic blocs, one led by the US and its allies, the other coalescing around BRICS, each with its own currency networks, trade alliances, and tech standards. A more polarized global system might hamper overall growth, as duplication of supply chains raises costs. Yet for countries eager to break from Western constraints, that may be a risk worth taking. Russia's repeated assertion that the era of Western dominance is ending resonates with states that resent dollar-based sanctions. If enough of them join forces, the global order could shift from a unipolar to a multipolar framework, one in which no single power can isolate another so easily. Future scenarios. Scenario A. The U.S. escalates. New sanctions target entities that finance Cuba, scaring off smaller investors. BRICS stands firm, but bigger commercial banks get jittery. Cuba sees partial gains, but remains under strain. Scenario B. Washington tries soft diplomacy. perhaps limited sanctions relief to keep Cuba from fully embracing BRICS. This could lead to negotiations, though domestic U.S. politics might complicate any deal. Scenario C, BRICS invests heavily. China sets up EV production lines in Cuba, with Russia supplying energy infrastructure. Cuba's economy modernizes, bypassing U.S. financial channels. Other sanctioned nations join the club, weakening the dollar's global role. Scenario D, internal friction in BRICS stalls. Big projects. Promises are made, but funds don't arrive promptly. Cuba's membership yields modest outcomes, and the U.S. embargo stays mostly intact. Which outcome unfolds depends on how aggressively each side pursues its goals. High-level diplomacy, economic logic, and even local politics all factor in. Still, rumors swirl about a groundbreaking announcement. China's biggest battery maker is set to unveil plans for a Cuban EV assembly plant financed in part by a BRICS development fund. If that's real, it could spark a cascade of deals, rewriting the island's economy, bypassing the dollar and rattling U.S. sanctions policy. Will Washington try to slam the brakes or accept that a new financial era is dawning right under its nose?